And welcome to another episode of Experts Speak. I'm Michael DeLon. Today I'm talking with Rob Natale. Now, Rob, first of all, thanks for squeezing me into your calendar and being my guest today.
Yeah, no, thanks, Michael, for having me on. Looking forward to chatting with you.
Yeah, well, it's going to be a fun conversation because Rob works with, medical professionals specifically, but he can work with anybody to help you multiply wealth without wasting your time. And we're going to dive into this because it's really intriguing how he helps people do that. So let's just dive into the deep end, Rob. Tell me, how in the world did you get doing what you're doing today?
Yeah, no, it's a good question. Thanks, Michael. So yeah, my backstory is I used to work at a pretty prominent asset management company called Columbia Threadneedle Investments. So more on the Wall Street side of things. And I would be working with financial advisors out in the Pacific Northwest. And my job and responsibility was selling different investment products. So mutual funds, separately managed accounts, exchange traded funds from the Columbia umbrella. And my experience was I was working with a variety of different individuals and teams, and they were managing assets, could be as low as 20 million in excess of, $3-4 billion, almost mini family offices. And what my experience was, these teams that were managing the billions in assets were utilizing a lot of strategies that I would say 90% of the population doesn't even know exist. It to me kind of felt like a good old boys club, the wealthy keeping ideas amongst themselves.
Yeah.
And one of those being specifically real estate syndication. So for those who are not familiar with what that is, it is where limited partners come together, pool their assets, and invest in a property that they would not otherwise be able to afford on their own. And they rely on the general partners to execute that business plan. And to me, this was such a complete dichotomy from the medical professional community. I have 3 family members who are medical professionals, and anytime there's a new discovery made that's the betterment for all, that information is always disseminated out to the masses. So it was just so startling and stark to me. And then talking to my family about, their job and always putting others before themselves, I could see also the stress that the job was wearing on them between the burnout and trying to seek a better work-life balance and having insurance companies dictating how to treat patients and all the merger and acquisition, M&A activity taking place in this space where contracts are being renegotiated. There's just so many headwinds stacking up. And then I would ask, what they and how their financial advisors were working with them. And it was more often than not, I'm in a 60-40 balanced portfolio, 60% stocks, 40% bonds. And, they collect the financial advisors an asset under management fee of around 1%. And if the market goes down, it's more or less, it's buy and hold, buy and hold. So to me, I just saw then how poorly the financial services industry was treating them.
Yeah.
And the last piece of it really tied together was, in my experience, working with advisors on a day-to-day basis. And I'm not saying this for everybody, not all advisors out there. More often than not, I truly felt that they were not operating in the best interest of their clients and operating as a true fiduciary.
Yeah.
All those things stacked together, and I said, you know what, I'm leaving this industry. I'm no longer comfortable working in this industry. Moral compasses no longer align. So what I decided to do is to start my company, North Shore Capital. So it's a privately held real estate investment firm. And what we do is we are helping medical professionals really buy back their time and expand their wealth through passive real estate investing with no time commitment required. And that's now my mission.
I love it. That's a pretty succinct mission there at the very end. I love that. Buy back your time and expand your wealth. That was great. Now, the other thing, and I love this because a friend of mine just married a doctor.
Yeah.
And his wife, the doctor, is just like you said, clients first, right? She works lots of hours. She loves what she does. But what hit me the other day is, she makes a great income. But what happens when she gets hit by a truck? She has a stroke. She can't do her job. What happens to that income? What happens to her future, right? And I think one of the things that I love about your real estate syndication concept is it is a way to build dare I say, a monthly recurring revenue. I don't know if that's the right word.
Well, I can kind of give you a good way to think of it analogy wise, right? Think about when if you're flying on a plane, okay? Usually, depending on the plane, more often than not, right? There's two engines on that plane. Let's say as a physician, doctor, dentist, right? You have your engine one is your day-to-day. It's your job. It's your active income, right? That you're talking about. But in case something does happen, yes, you can get disability insurance. But what happens if there's something happens where dramatically your income is being reduced?
Yeah.
You want to rely on a second engine. And that second engine, which I like to educate and teach and show these different type of investment opportunities, is through passive real estate investing.
Yeah.
You want to have a second engine, not relying just on that one in case something does happen.
Yeah. And it's really, and I love that analogy because that makes a ton of sense, much cleaner than I was trying to explain it. But the idea, I've known a lot of physicians in my life, right? And a lot of them own their own building and then they rent from themselves. And that's kind of the concept. But what you do is you take it to a new level in that you're syndicating to help I was on your website, and a couple of your recent acquisitions have been like these beautiful, I think they're apartment complexes or condo complexes. And so you can invest in something like that that's going to grow in appreciation, grow in wealth, grow in income, right? Explain a little bit more of that, of how you do it, because it's really a hands-off aspect from the investor standpoint. They're not managing their rentals and all that stuff, right?
Correct. So the way it works is like I alluded to before, investing as a limited partner, you are limited in nature. And your limitation is just the capital and your principal that you are investing. As far as anything with regards to risks with the loan or any other risk involving and then managing the partner in the day-to-day, that does not fall on the limited partner whatsoever. That is falling on the general partner. They are assuming all the risks and the responsibilities with regards to that investment opportunity. So what I do, Michael, is how it's structured and how I talk to my clients about it is anytime we first have a conversation, it's more like a personalized strategy consultation, right? It's called because this type of investing, like any type of investing, is not for everyone. So the first thing I want to help establish, and think about it as a physician-patient type of relationship, right? I like to use analogies to kind of paint the picture where in this case, I'm the physician and I'm asking the questions about risk tolerance, what they're looking for from money, time horizon, liquidity standards, tax strategies to help determine, okay, what specific avenue may or may not be the right fit. And again, go back to the analogy of the physician to patient. If I feel I can be someone that can provide and get them to where they want to go, then great. But if not, I can refer or look to put them in touch with someone else who I think could be a better fit for what they're looking to accomplish.
Yeah. Yeah. And that's really good there because not everybody's a great fit. And I think sometimes this concept of limited partnership, being an investor in a, what do you call it? It's a syndication, right?
Yep.
I always laugh at that word because syndicate, it's always like the mob syndicate. It's like, okay,
there's
be a better word. I just look at it as a pool of investors investing in an asset that is going to produce, a return on my investment without me actively having to manage it and deal with it and check it. I put a portion. The other cool thing is the way your company runs is you're acquiring different properties so that, dare I say, you can diversify. If somebody's investing with you, they can invest in multiple properties over time, right?
Correct. So my job, Michael, for those listening, my job is to do the due diligence on the specific general partners and then on the specific opportunities. And then if both of those boxes are checked, to present those opportunities to my clients and ask, would you like to invest alongside myself in this specific opportunity? So my job going through this is I talked about the physician-patient relationship. We've all been to seeing a physician, a dentist, and there's been questions that we should have asked, but we just didn't even think to ask. It's one of those things where you don't know what you don't know.
Yeah.
This is where really my role and expertise comes into play, is to do the due diligence on behalf of my clients, because this is my day-to-day. This is my job. I love doing what I'm doing, to vet out those folks, those opportunities, so I can confidently and with conviction present them to my clients. To again see if they want to partner alongside myself in these opportunities.
Yeah, and that's really good, because what I get from you is you may have a great property, but that property may not be a great fit for 3 or 4 of your clients, let's say. So
Correct.
I want to present it to them and say, hey, Michael, you need to invest in this because we need money. No. This doesn't fit Michael. So just like if I went to a doctor and I don't have cancer, they're not going to try to prescribe a cancer medicine because it's the best thing, right? And so you take a very, well, dare I say, a fiduciary role.
Yep.
That the properties, the portfolio that you have and that you're wanting to add to the portfolio, because you're always accumulating more properties, or that's your desire. And to do that, you need investors or partners, is right?
Yeah, so the way I'm doing it too, Michael, is there's so many different asset classes in commercial real estate. We talked about multifamily. The other two that I'm very bullish on is a short-term rental portfolio and a real estate income fund. There's also self-storage, this hotel, the multifamily conversion, there's mobile home parks, there's RV parks, etc. Each specific asset class has its own unique strengths to it, whether maybe one is more tax advantageous than another. One spits out more cash flow on a yearly basis than another. One has more appreciation than another. So my goal is to vet out partners, right? These general partners that I feel confident working in, that each provide their own different flavor or unique strengths. So if I'm speaking to a client, maybe they're looking for something that's a little bit more liquid than another type of investment. Hey, I think the real estate income fund potentially could be a good fit. Or if they're looking for something more tax advantageous and appreciation, hey, I think multifamily or short-term rental could be a good fit. And we continue to have those conversations.
Excellent. And that's really good, because that means that you're taking your potential investors and current investors and really understanding who they are. What are their objectives? Because you may find a physician who's 5 years into their practice.
Correct.
They have a totally different mentality than the physician who's been in practice for 35 years.
Yeah.
And thinking about transitioning in the next 5 or so. Those are totally different timeframes and perspectives and tax, right? So you have to understand all of that.
Correct. Yeah, it's each individual is different. That's why what I was sharing with you, Michael, what I really love about it, it does have some financial advisory pieces to it,
right.
Which I really enjoy, and seeing, in my opinion, the right and wrong way to do that throughout my previous work experience. It's very, like, I think I shared, it's just very rewarding work. I love doing what I'm doing. Yeah, it's awesome. Really good.
That's good. That is awesome. And you've got the financial background to kind of understand all of that. And the other thing that the people really need to understand is like most investments, it's not a either or, meaning you're not looking for everybody to say, I'm putting all of my assets with you. It's no, this is a portion of an entire portfolio that you might be able to use assets that you have in a 401k or whatever.
Sure.
Leverage them into a real estate thing to do tax saving, right? It's this whole viewpoint.
Yeah, so the way my rule of thumb is, if you look at some of the biggest pension plans in the country and the world, look at CalPERS, it's 470 billion, a New York City state pension plan, that's 270, I think, excess $1 billion. My rule of thumb is, how are they building out? They take a holistic view as far as portfolio allocation. What's their weighting to private equity, specifically real estate, right? I use that as a rule of thumb, and then say, depending on the individual, dial that up or dial that below. To your point, I firmly believe in both public, the stock market, and private, right? I think there is a place for all of that in one's portfolio, but I do think it's important for individuals to be diversified into the private area as well, because that's something that more often than not, your advisor is not going to talk to you about, because more often than not, they don't have the ability to have those assets under their management. And because those assets, they don't have the ability to have them under their management, they're not going to talk to you about them, because if they do, those assets might leave their book of business, and therefore what they're being compensated is going to be impacted.
Yep. Yeah. They're going to lose money by giving you this kind of advice. And that's why it's interesting. The little light bulb came on when you were talking about public and private, and how years ago people had pensions, right? My dad was a fireman. He had a pension.
Yeah.
And that was there. Well, then that changed somewhere, and the government kind of said, no, we're not going to do that. Companies, you don't have to do it. Now you get to do this 401k thing, but you have to do it on your own. And so in a sense, that public thing became private, even though I was investing, you know, in public things and stock markets and mutual funds. But it's us individually taking ownership of our wealth and saying, I have lots of options, but I need a voice that is telling me some things that I may not be hearing other places. And that's why Rob, in his background and everything, is so valuable, to be able to have a conversation and say, I've thought about real estate. Here are some of my concerns. Here are my questions. And then have the dialogue. How does somebody start working with you? Is that kind of what it is, that first reaching out? Or, I mean, what's the process of somebody who's out there thinking, you know, I've thought about this, I'm not really sure how does somebody work with you?
Yeah. So the first thing that we do is we get on a call together. I think I share like a personal strategy consultation type call. It's usually about 30 minutes. I always give an extra 15 minutes as a buffer to make sure we go really in depth to understand what their objectives are, why real estate, okay, right? Determining what's the why for everything. Why real estate? Okay, I want to get passive income. Very good, but what do you want that passive income to do? What do you want that vehicle to be? Is it travel, to spend time more with your family? Is it to focus more on philanthropic, I always struggle with that word, missions and opportunities? Right? We want to determine what you want to use the vehicle for, okay? And then after, it's always then about education, right? And getting folks as educated as they can, because education brings confidence in anything you do, right? No matter, I'd say, walk of life. So I put together 2 educational resources that I always provide. One is called a Financial RX Playbook. It's called How Medical Professionals Can Win Through Passive Real Estate Investing. We go over the benefits, we go over the risks, we go over specific questions to ask a general partner if you ever decided to do this on your own. So we try to take a holistic view at a very high level of what this type of investing is. I've also put together a freedom metric calculator. And what that essentially is to determine, okay, how much income passively do you need to make monthly, and then extrapolate that to a yearly basis in order to become financially independent. And I determine that financial independence by having that passive income cover all your living expenses. So we go through that. I provide that to folks to fill in. It's rudimentary by design. We're not looking to split the atom here. It's to give you a framework of, okay, now let's reverse engineer. This is my number. How can we do that in a specific period of time?
That's very cool. No, that's you just blew me away, because the calculator like that is so good, because so many people talk about financial freedom and all, and I think there's a misconception that financial freedom equals $4.8 million in the bank or something like that. It's like, well, no, it's really what you just said is covering your monthly expenses, where, okay, now I'm not locked into anything.
Yeah.
And it's all passive through investing in real estate. And now what else can you do? And it unlocks the doors to, I love that, missions or giving or legacy or travel.
Yep.
What do you want to do with this? Because when you have that purpose, then it helps you realize, okay, what kind of real estate do I need to be investing in?
Yep.
Do I need cash flow? Do I need long-term wealth? What do I need? Tax benefit? Okay, Rob, what do we got? And then you can go out and you can say, well, here are the 2 or 3 portfolios or properties that would fit your perspective, right?
Correct.
And then they come to the table and they go. So who is talk about real quick, a prospect? Who's a good prospect for you? Is it somebody young? Is it old? Is it middle? Does it really matter what do they need? Who should or should not reach out to you? Let me ask you that.
Sure. So I can tell you the age bracket of folks, then I'll tell you who shouldn't, right, and should not. I mean, the age bracket of clients I work with is usually between 38 and 58. It's young. It's, physicians, dentists, nurses, maybe they've kind of gotten all their student loan debt squared away or close to. And then 58 where they're now really starting thinking about, hanging up the cleats, as they say.
Yeah.
That's kind of the age bracket, I would say, overall. Now, as far as who should and who shouldn't, so I'm always, for me, and this is what I shared before, I'm very passionate about, even if I'm not the right fit for somebody, to help steer them and put them in touch with somebody else.
Yeah.
And when that means a financial advisor that I feel very comfortable referring somebody to, or maybe somebody on the estate planning side. So even if I'm not the right fit, I feel like I can steer someone in the right direction. So I'm happy to talk to really folks, even if it's not a right fit investment wise. Now, the type of investing it's not necessarily for specifically, I would say outside of the real estate income fund, okay, that is like a high yield savings account. You can think of it as on steroids. It pays between 8 to 9% with 90-day liquidity, okay? Outside of that type of investment, most of these investments are not very liquid, usually somewhere between 3 to 5 years. So this is not meant for someone for rainy day fund who thinks they're going to need their principal back in a specific period of time. Again, outside of the real estate income fund, yes, that could be a fit. But other than that, if liquidity is a very important, candidly, I don't think it would be the best fit for that. As far as who should, you alluded to it a little bit, Michael, it's individuals. It's right. If you have been thinking about, hey, how can I start that second engine that we talked about from an income perspective, start generating true passive income where I'm not necessarily tied down by the golden handcuffs. And you get that empowerment where you're going to work, not because you have to, but because you want to. Medical professionals go into for what they do. They want to help others. That is such a big mind shift when you have to go because you need a paycheck versus I get to go and I get to do this and I get to help people. Then I welcome having that conversation to see if I can be a fit to help you get towards a path of financial independence.
That's awesome.
It's essentially taking, Michael, right? There's the Hippocratic Oath in the medical field, right? Do no harm. My whole goal from a financial Hippocratic Oath perspective is, one, preservation of capital. Do not lose principal. Do not lose investment, and then appreciation.
I love it. I love it. Okay. I think, Rob, you and I could probably talk for the next hour or two, probably, because I've got lots of questions that I'm not even asking, but because it's so fascinating. And I love your airplane analogy because I used to fly an airplane years ago. When I was a kid, I soloed on my 16th birthday, had a single engine, little Piper thing, right? And I thought, wow, that'd be really cool. Then I thought, wow, well, I wonder if I could ever fly a twin engine plane. And that's really what you're talking about is most of us are flying a single engine plane, active income. You're adding an engine so that I've got now two sources of revenue, and it stabilizes. It allows you to climb faster, higher, go further. So there are a lot of analogies in your airplane thing that's really, really cool. I'm sure this is like scratched an itch for some people, and they're just intrigued. What's the best next step for somebody if they just want to reach out, start that conversation, even do a little research, get some of those free things that you mentioned, the calculator and the matrix and things. Where do they find you?
So I can be found if you just northsquarecapital.com is my website. It's a contact page. You can schedule a call there. You can get the educational resources that I spoke about. I'm also very active on social media, particularly Instagram and LinkedIn. But again, for the tools, resources, the quickest hitters, northsquarecapital.com, calendar, schedule time of chat, free educational resources, and look forward to chatting to anybody who would love to have a conversation.
Awesome. northsquarecapital.com. I'm going to grab that and your LinkedIn and put those in the show notes because a lot of people are probably listening to this on their phone as they're driving or walking the dog or anything.
Sure.
So go, if this has been intriguing to you, go to the show notes and reach out to Rob, northsquarecapital.com, and just start that conversation. Download some of those resources. Start getting your head in the game of how do you go from a single engine plane to a double engine plane in your investing to build wealth without wasting your time, and have those conversations to see where passive real estate investing might fit into your overall portfolio of wealth building for you and your family. It'll be a great discussion. Rob, thank you, man. Thanks for being my guest.
Yeah, thanks for having me. I appreciate it.
Well, you're welcome. I appreciate what you're doing and the integrity that you had to say, my moral compass isn't right over in this industry. I'm going to come over here, and you've used your background and your expertise to create something that's really, really unique, serving an audience that really needs it because they're passionate for what they do. They don't want to spend time building real estate over here and managing properties, but they understand the value of that, and you bring those two worlds together. So I just think it's really cool. So thanks for doing that, man.
No, absolutely. No, thank you. It's great.
Well, you're welcome. Thanks for being my guest. Thanks for listening to Experts Speak. Tune in again next week for another fantastic episode. Take care. God bless.